You may not realize that the dollar Swiss franc pair has a pronounced seasonal tendency for weakness through late spring and summer, a pattern that could come into sharper focus as the pair approaches a key resistance level we'll look at in a moment. With the next major US inflation and central bank decisions looming, we want to analyse the data in a bit more detail. This chart shows you the typical development of the dollar Swiss franc over a 25-year period from May 15th through to August the 4th. Now, over this stretch, the dollar Swiss franc has declined with an average drop of over 2% and only a 32% win rate. And you can see sometimes the maximum falls have been really quite pronounced here in 2011, a 13+% drop, and still some pretty heavy falls in other years as well. You can see falls of 6%, 5%, 4%, 7%. So there is, when you look at the cumulative profit curve, a persistent downside pressure during this period. And the pattern tends to return, a string of losses, and tends to accelerate as we go into late June, early July. You can see that sort of acceleration towards the final part of the pattern. Now, technically, the dollar Swiss franc is at an interesting place. You can see here got big resistance at the 8,400 region. That'll be very interesting. Any sort of pull back into that area, you would expect sellers. And also just be aware that on the weekly chart, you've got this break of these swing points here. Old support becomes new resistance. So it's obviously a big round number, that 8,400, good area for potential sellers. But be conscious, technically, there's a very large kind of band of support that we're in. So, don't be surprised if as price moves down here, there's some kind of snap back. So just be conscious of that. Any falls below big round number of 8,000, then you could see further losses ahead. Trade risks, there's a number of trade risks with this. Of course, geopolitical risk with tariffs. There's also any fundamental shift in US or Swiss policy expectations. If the Federal Reserve delays rate cuts, or the SMB move to formally embrace negative interest rates, then dollar Swiss franc could break through that resistance and invalidate the seasonal bias. So always monitor for significant macroeconomic catalysts, especially in this current environment. Use Seasonax for your professional handling of market moving events. Remember, don't just trade it, but Seasonax it.